Hey everyone, Big here. It is Friday afternoon, and just to recap what happened this morning in my stream was that I traded very poorly. And whenever I don't have a good analysis, I always like to review what happened, the PA that happened throughout the day, and see where I went wrong and why. Now, lately I've been talking more about higher time frame liquidity levels, not so much in terms of like London high, London low, Asia high, Asia low, just straight liquidity levels. And what I've shown several days this week is there's basically two moves. It's in the New York session. There's a move to sweep the buy side, and there's a move to sweep the sell side. Those are the two main moves. And it just varies as to where those are and which one is going to be taken first. Now, this video, I'm going to strip it down a little bit. Okay. You can see the chart's naked. It's a 1 minute chart and it shows swing levels, really. That's really all that matters are swing levels and what the market's reaction is to those swing levels. So I want to go over one way of looking at these swing levels, and especially in reviewing, let's say, the 3 hours prior to the cash open to see if that gives us any clues as to which one is going to happen first. Is it going to be buy side or is it going to be sell side? So we're in replay mode. This is MNQ. It is Friday and we're at about 9 o'clock, okay, Eastern. So it's a half an hour before the cash open. And what do we see? Well, this overnight, and here's the Globex open right down here. Uh, what do we see is that we have this swing high right here, that liquidity level, and what happened after it. Okay, so there was a sweep and then a return to the range. There was no continuation higher. And on the subsequent test, none of them were able to sweep this high. And then the move off of it, which, if to give you a better reference, the purple is our London range, okay, and the red is the pink is the New York pre-market, okay. So we don't need that, just naked chart. That's all we need to see. So here's what the suggestion is: because there was no continuation higher after that sweep, there was a move off of it that swept this liquidity level. And then the second move, still pre-market, swept both this liquidity level and this level with continuation lower. The suggestion is that this liquidity level right here, which happens to be the London low, is the first target. Okay. And it's all based on what happened here and then what happened here. Okay. So how do you get on side for that? Well, so it's half an hour before, and we have this level right here. This move higher, broke structure, followed by a stronger move down that broke this structure, and we're seeing continuation lower. So it's very similar to this up here, but on a much smaller scale. But the volume here is significantly higher than here. So the moves are going to be quicker, and each 1 minute candle, I think, is more important than any of these 1 minute candles because the volume is so much more significant. So there's two different ways to trade this. First is using the last up close here, the midpoint of that up close body's range, okay, at 29,498. That's a possible short. So let's move forward a half hour and see how this plays out. Okay, so here's our 929. This is our 930 candle. Okay, so we had tested it twice. Strong move down. Do we sweep this level? Actually, I don't remember. Let's see. Yeah, we do. But let's say you're not on board here, or you're not on side here. Let's look at this right here. Here's our last up close that swept this and swept this swing level right here, and it was the open. So for my strategy, sometimes it's the open of a candle, sometimes it's the midpoint. And in this situation, it was the open of that 1 minute candle. So this would be your short entry after confirmation, right? So we open lower, swept that with continuation. So that's different than this sweep up here. There was no continuation. There was no significant 1 minute close above that prior liquidity level. And same with here too. So it doesn't always work, but if you look at those subtle cues, they will help you to determine how to trade. Okay, so it retested this, or it retraced to this level, and it looks like it's going to sweep that, right? So let's just let that play out. Okay, so there's the sweep. If you consider that level as a POI, then you want to see or think in terms of, okay, let's see if a bullish CISD prints. And if it does, then that'll give me a good opportunity to get long, meaning it'll be a high probability setup. Now, there's two different ways of doing this, okay? Here's our swing level right here. And these candles did not break above it. But if you think in terms of wicks, then you could say, oh, we do have a CISD right here. So then you look at the last down close that printed prior to that CISD, the one that tested the POI, which is usually the most important one. Any candle that tests a POI with a reaction in the opposite direction is usually, in a bullish scenario, it's going to be support. In a bearish scenario, it's going to be resistance. Okay, so you marked up the midpoint of that. We see that that level's tested. And if you think in terms of like risk to reward, this is about a 30 point risk. And the thought is, well, there's tons of liquidity, right? Whether it's just the AM, New York AM liquidity, these two levels as a target, that's fine. Or all of this, which is low resistance liquidity right here, is the next target. And I find it's safest to take partials. So I would take a partial at here, maybe another partial here, and have some runners for that, or even this liquidity level, which really, that's the real one right there. Okay, so like I said, I usually use a close, a 1 minute close above a swing prior to it registering as a valid CISD. So let's see what we have. Here's our next one. Let's just slow it down a bit and see if we get a valid setup here. Okay, so there's our 1 minute CISD. Where's our last down close? It's right here. And this one did break structure. So you could enter at the open of that. You could re-enter at the open of this. It's, nothing works all the time. But one of these levels is probably going to work. And in this scenario, there's actually 3 levels, unfortunately. I wish it were 1. So let's say you took it after that close above this swing, this swing, this swing. I mean, that's 3 different levels right there. That 1 minute candle at 9:52 a.m. broke all of those and closed above. So that's a pretty strong indication that we have a change in state from bearish to bullish. And it all happened after this POI. So let's say you took it at any of these levels here. Stop loss should be down here. And let's see how it plays out. We can speed it up. I think you guys know how this plays out. Okay, so which level worked? It was any of these levels, right? Because after the CISD printed and we had a retrace, There was no close below any of these levels. You could have used the open of this down close and it was valid because it did sweep, it did break structure of the prior candle. This candle also broke the prior candle structure below, so that validates it as a, I believe, order block, right? So any of those would be valid levels to long. And then let's see. So take a partial right here at the New York Open. You have a pretty deep retrace. Actually, it comes down. It's a much deeper retrace. That would be a hard hold, a very hard hold. But it eventually does sweep that, the buy side. So that to me is really, it's what I've been showing for the past several, not every session, but several of the last few New York sessions have all been two moves: sweeping sell side and sweeping buy side. And my suggestion is that noticing what happens in the pre-market is going to give us an indication as to which side has a higher probability of taking first. Okay, thanks. Have a great weekend.